Hello and welcome to Wealthy Money TV. Today we're going to be talking about using the bank to trade shares and invest in the stock market. Yes, I'm all about investments. I'm a believer that you have to make money work for you, or you'll always be working for money. So with me today is a banker, and this is what he does for a living. Advises people on shares and stock and trading and everything. So welcome, Ethienne. How are you?
Okay, I'm excellent. Yourself?
Fine, thank you. Thank you for agreeing to do this video today. So Ethienne, can you just tell people a little bit about what you do as a banker? Quick recap.
Currently, I'm involved in the holistic banking solution for medium to larger businesses. It essentially looks around the relationship management, which goes past transactional, capital raising, foreign trade services, risk and wealth management. Okay,
wow. Why do you think investments are key to creating wealth?
Yeah, I think everybody's got finite earning potential in terms of what you are going to be paid per hour, or what you're going to be earning in your lifetime. However, one area that you should look at is passive income, and investment is one of those ways that you can actually facilitate that. Obviously, there's different classes of investment which we'll be touching on later. Yeah. But investment is just a vehicle to get a passive income, which is important.
Yeah. So just quick note for someone who's saying, what is passive income? Please explain that.
Essentially, it's when you apply funds or resources to then provide income that you are either periodically paid for or at the end of a term.
Yes.
For which you didn't actually work for. There's no hourly wage or salary that was paid for.
Yeah, so awesome. I love the idea of passive income. I love passive income, not just the idea of creating it. So why should people invest in the stock market? I know a lot of the videos that we've done so far have been around investing in unit trusts and just getting started. So this idea of the stock market seems to be a little hazy. So why should people consider the stock market?
Well, in the stock market, you're able to secure higher returns in a shorter amount of time. What you need to be cognizant of is that the risk is obviously significantly higher than investing in other asset classes. Yes. When I say other asset classes, I mean, for example, investing in property or investing in fixed interest-bearing investment vehicles, or investing in unit trusts, where a lot of the investment decision is made by big institutional investors who operate in the market, and that's their core business.
Yes. So when you invest in shares through the bank, do you get a banker or do you do it yourself?
Well, you can invest in the share market, in equities, derivatives, different types of vehicles in the equities market. You can invest you can have a private wealth manager, or you can do it yourself via the various share trading online platforms that the banks have.
Okay, so if I decide to do it via myself, what is the process like? If I decide as an ordinary, actually let's start by asking, can ordinary individuals start trading using the bank, or do you have to have X amount or earn X amount?
No, there's no limitation per se. You would have to have a call margin on an account of about 50,000 Rand. Generally, that's the entry level where you would put that on your liquidity account.
Okay.
And then via the online share trading platform of the various banks, you can then purchase your shares and make your orders, buy derivatives or whatever instrument you're trying to purchase.
Okay. So what I'm hearing is at 50,000, you have to have 50,000 that you're comfortable losing when you get started investing in shares with the bank.
As a minimum, that's what you're wanting to invest, and once again, comfortable losing is maybe hard. I don't think anybody's comfortable with losing money. I think it's where you have a risk view on.
Okay.
It's where you're able to say, look, if I lose all of this money, I would still be okay to carry on my normal investments.
Yes.
As well as, obviously your daily financial needs, you must be able to. I must stress though that investing in the equities market, whether you do it via a private wealth manager or if you do it yourself via an online trading platform, must be just part of your investment strategy, your broader investment strategy.
Okay.
I would urge everybody to look at least owning a primary residential property as an initial investment.
Yes.
I would look at saving some money in either a unit trust or as well as some sort of savings account or money market account that you're saving in. Another big investment is trying to bring the balance on your mortgage down as soon as possible.
Yes.
Because the opportunity costs, in terms of is generally the rate that the bank is charging you. If you're not able to secure that rate in a savings account, it's always better to rather just try and repay your mortgage as soon as possible.
Yes.
But then also look at saying, look, I'm going to invest 100,000 and put it in equities. It's good because the return could be high. We've had the South African stock market, the JSE, performing very well over a large number of years, even following the recession.
Yes.
It was able to recover relatively quickly and it showed good returns.
Wow.
But as I say, it must just be a basket in your portfolio of investment. It must form part of it. The higher your risk appetite, the bigger the amount of money or percentage of your investable assets I would then channel in the equities market.
Yes.
And another thing that I would encourage, the younger you get involved in the debate, so that if you have you're able to ride out periods where there's poor performance or recessionary dips, and then you can wait for the market to then correct again. So you can have a capital gain, and also you've got earnings from the shares, you've got dividends, those things, which will also broaden your investment base. So
yes, wow. We're definitely going to have an expert coming to share about dividends and the return on shares and how share prices move and change and what people have to be aware of when they're investing in unit trusts and mutual funds as well. So this is quite awesome. But because what I'm hearing from you, Ethienne, is that first things first, sort out yourself, sort out your house, pay down the debt, work on starting with low risk investments, so at least by the time you get to the high risk and you lose some of that, there's diversification within the portfolio. So our shares are really high risk to just get started investing.
It is higher risk. It's a high risk instrument of investment, definitely. It's not, but don't be intimidated by it per se. I think if, once again, knowledge is power. If you study the market very well and if you are very focused and look at fluctuations all the time, like wealth managers do, then a lot of the risk is quantifiable, number one, and the knowledge actually decreases the risk because you've got a greater understanding of the movement of the market.
I love that. So I have a financial advisor that I work with, but I've always wanted to know you think that coming from a finance background and having gone to do an MBA, I would know the difference in the different things that various people do, but what is the difference between a wealth manager and a financial advisor?
Look, it's different. I myself, I'm not particularly an investment specialist. I did study investment analysis, but today I would say broadly a banker. So, but you must have an understanding of the segment. So if you look at somebody who's either an asset manager or wealth manager, who deals specifically with investing in the equities markets, or aggregates, or is an analyst in the field. They, every day the market opens, they know what happened overnight, what happened over on the different stock exchanges. So, and they know what is happening in the derivatives market. There's a continuous focus on the market on their side. Whereas a financial advisor would generally sell either unit trust, mutual funds, retirement annuities and all that,
Yes.
you can have an exposure via your financial advisor
True.
to the market, but they would also be taking the opinion of somebody who's an asset manager or institutional investor, and then make their decisions based on their recommendations. Yeah.
And at which point do you suggest that people start thinking of working with wealth managers?
If to make the cost viable that's attached to it, I would say once you've got around about R1 million in liquid assets that you want to invest, you should be really start working with a wealth manager or an asset manager to manage your portfolio as well, or to at least give you advice on when to move out of certain equities and when to move into different ones. Because there's commodities market, there's options, there's different instruments.
All of which we'll be exploring here.
Yes. So yeah, if you start having a relatively high level of liquid assets, R1 million upwards, the value that you're going to be getting from the knowledge of somebody who's either a wealth planner or asset manager would definitely be worth the cost for that dedicated advice.
Wow. Well, thank you so much, Ethienne, for coming through and sharing your knowledge so freely with us, and also talking to us about your personal experience. If anyone wants to get in touch with Ethienne, his email address is at the bottom of the screen, and please feel free to contact him. His email address and phone number are on there. I look forward to seeing more of you in the future as we're shooting more videos and having another episode next week. So stay tuned, and don't forget to subscribe to the Wealthy Money YouTube channel. So press the subscribe button, and also don't forget to sign up for the Wealthy Money newsletter. So just click on the bottom of the screen and you can go to our website. Have a phenomenal day. Bye.